Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver here. It's the week of the 20th of July through the 24th. Last week we came off a massive earnings week in stocks. We have another one to follow up this week. Notables include Halliburton, IBM, Snap, United Airlines, Coca-Cola, Capital One, Lockheed Martin, TD Ameritrade. We have Tesla, Microsoft, Chipotle, Procter & Gamble, Equifax, Twitter, AT&T, Royal Caribbean, Southwest Airlines, Verizon, and Honeywell. So big earnings this week on the table, just like last week. Banks did really well last week. We had Chase, Citi, Goldman, Morgan Stanley announced way better than expected earnings. But here's the caveat. There might be a ton of foreclosures, defaults ahead. So in fact, a lot of those large firms have set aside 30 to 50 billion dollars over the last couple of quarters to know that things like this could be coming over the next 3 to 6 months. So yes, Wall Street still celebrated better than expected earnings. We have another solid week this week. But I think this image sums it up really well. It's like something bigger is brewing. Something bigger is going to happen. Volatility is back down towards major lows. I mean, I've been watching this. The VIX. The VIX is down to 25, which erupted from March's kind of a $15 gap. We went from roughly $17 on the VIX, gapped up to 25, and then just soared for 2 weeks up to 85. But it has been suppressed and pushed back down. Now look, if the VIX comes down below $20, I'm going to buy it. This can include simple call options to buy the VIX. This would be possibly playing some VIX-related ETFs like VIXI. Back in March, we made, in my trading room, we made a ton of profit on TVIX, VIXI, UVXY. There are a lot of ETFs related to the volatility index. And it's, look, if it comes back to sub 20, I am looking just kind of parking a position around that between $12 and $20, just sit into waiting for volatility to increase. I mean, we have done an amazing thing with, high volatility in March, suppressing it back down towards those lows once again, and something bigger is coming. You can sense it in the market. There seems to be, some technical drifts. There's a lot of consolidation. We'll go through the charts today. I have a lot of boxes just drawn in on my charts. My robots that are trading consolidation have been doing extremely well, and I am so proud of them. I'm so happy to have them, but I also know that I will have to be adjusting them when things start to break out, because I don't want to be caught in a robot that's looking to trade these tight little ranges, and all of a sudden we just blow open these support resistance levels and the markets go crazy. So the longer we kind of linger into this low volatility, like kind of ominous sense of something bigger is coming, I feel like we're probably going to experience something like we did back in March. It just seems like it's going to be fast and furious. And I think back to 2015 and 16 when we had some pretty decent drops in the U.S. markets. We saw like 15 to 20% drops, and it happened twice in the same year. And as we come out of summer trading and we go into potentially a volatile fall, I would suspect maybe a similar cleansing where it's just tons of volatility, tons of madness, tons of chaos. Traders will be challenged by this, but also have an incredible amount of opportunity. So that's the big summary for today's weekly outlook is things are going to happen. If you think trading is boring right now, just give it a month, give it a couple months, because it's not going to be boring. So let's take that into this week's outlooks. Let's get to the charts. And, big things are going to happen. So let's first jump into this. We understand there's risk in trading. Please then always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. If you're following my education out there on YouTube, or I posted on IGTV for Instagram, I have a trading video series called Keep It Seriously Simple. I'll be adding to this. I'm actually going to start creating different playlists and just doing some more general education with a lot of the feedback that's been coming in. So look for more information out there, but just subscribe to my YouTube channel. Give me a like, give me a comment, and I appreciate everyone sharing these videos and spreading the word. Let's get into the charts. So I want to focus on a handful of pairs today in the Forex market. When it comes to stocks, my major play moving into the fall is going to be around volatility. I don't know if I'm excited to short the stock market. I know that it's tempting to possibly, short the QQQ, want to short the NASDAQ, looking for the S&P. I mean, all these uncertainties around, will the stock market decline? I think the technical structure is there. It's just, how do we time that? What is the major catalyst to cause it? But I do think that volatility will be sustained. So like I said, on the VIX, for example, if we hit 20 bucks, I'll be looking to buy it. Between 12 and $20, I'm just going to put in a position, pretty much buy the VIX and just wait for it to run back up to 40 or 50 bucks. Well, even if it's a spike. But I do think something coming over the next maybe 2 to 3 months will be very profitable in that regard. And that doesn't force me to take positions against the stock market, because right now you don't want to fight the Fed. You don't want to fight the central bank support around the world. So I'm not, and so as we see this kind of drifting and extensions and tight conditions right now, it's like the market's going to blow itself open at some point, and I want to make sure that I'm not overcommitted to certain trades and positions. So one pair in particular, I've been talking about this one for a while. I really like this trade. I still have great technicals on it. For example, my bar count is incredibly high on the Aussie CAD. And I'm looking for this just to make a basic correction. This is Aussie CAD. This is one of my favorite currency pairs to trade. And I'm looking at it from this standpoint. Okay. If we just have a simple movement from this low to this high, that's it. Now, the market does move in waves. And so if we have a technical reason, which we do, multiple of them, to fall back into a corrective zone, take a look at this. Okay. This 236 level, this 382 level, I like those spots. Now, that from current price is around, this is around 360 pips to the 236, and it is over 400 pips, almost 480 pips. Okay, I mean, heck, it's almost 500 pips down to the 382. Now, granted, this isn't a guaranteed top. All right, but if price starts to break the structure and shows more bearishness, I'm looking for a pretty conservative level around 9,100 or 9,000. I like this trade a lot. The technicals are still there. We don't have a lot of market movers this week as far as the news goes. There's a decent calendar as far as medium impact. There's a lot of medium impact news this week, but not a lot of high impact. So this trade requires patience, and we have exercised it. We still have it. I'm not getting out of this trade. I like it. I'm going to stay bearish on it. I'm going to commit to the 9,100 to 9,000 area to take some profit. It's one of my favorite trades right now. Also, another one that I'm really looking at. This has been something we've been eyeing the last couple of weeks. This is a pound Australian dollar. We have a pretty promising uptick today on the daily chart. Let's go into the 4-hour. This is one of my systems here called Right Trader Max. And let me go ahead and load this up. Okay, now I'm looking for this Right Trader Max to offer up a movement back up into previous highs right in here. Okay, movement back into previous highs and also in this shaded zone. So currently, price is trading around 8050, and we had a previous high around 8180. We have a nice shaded zone right around 8170. So I'm bullish on the pound Aussie this week. I'm expecting this to continue to rally. It might only take a couple of days. The pound is pretty active this morning. If I take a look at the currency strength chart, you're going to see that the pound is the strongest, the yen is the weakest. We're starting to see a separation once again of the euro and the Swiss, which is good. And then everything else is kind of around baseline. So not a ton of volatility, but a clear emergence of the pound being strong this morning. And everything else, weaker than that. It's a pretty easy trade. So pound tends to carry a little bit more volatility, but I'm looking for the pound Aussie to finish at least up towards these equal highs around 8170. Even if this is retesting, okay, even if this is retesting the high right here, okay, or the lows down here, I am long in this right now, and I'm looking to take this up towards that high. That's 8170 to 8180. If it goes higher to 8200, fantastic. Here is a little robot that's running right here. So I have the pound Aussie robot running. It is up about $230. I just took a trade on the euro pound, which is good. I'm in the pound New Zealand, which is good. Pound Aussie, I'm in 3 trades. We took those last week, and I'm looking to take that north towards that 8170 level. So that'll be 3 trades in profit, probably 300 or 400 pips of total profit, if not more. But I'm going to hold long on pound Aussie and look for that target this week. Another trade that I'm liking, Euro Swiss, watching this one pretty carefully. This is another kind of larger time frame trade that I'm interested in. I just got filled in a little pocket trade, by the way. That was filled. I had a chart alarm go off. I got filled at 107.23. So on the daily chart, here's what I expect to see. We have a low, we have a high. This makes a 1 wave move. We have wave 2 is all corrective. We come out of this falling wedge. We should be pushing towards a symmetrical move up towards 1.10. So my conservative level is 1.10. Ideally, it's trapping profits into the yearly pivot at 1.1045. So I do have some systems running bullish on this. I'm already long with my own manual positions on this. I like this trade quite a bit. We get to 110 higher, I'm going to start trapping and protecting profits. I'm still holding some older positions. I have some positions that were back here that I'm holding. I also have some add-ons over here that I'm holding. My break even on this trade is right around 107, so I'm in the money, but I'm looking to turn this into a nice profit trade and a nice pattern trade. So that's Euro Swiss. So Aussie CAD, I love the short opportunity. Pound Aussie, I love the long opportunity. I would hope for both of them that they fulfill this week. I've been short Aussie CAD for probably 3 or 4 weeks. I have some sell stop orders. I got filled on a couple of those last week. I have some buy stop orders on the Pound Aussie. We've been in and out of that trade a couple of times. So I'm using some really precise areas to trade. I'm being fairly aggressive as far as, letting price come in, price confirm, and protecting profits. I mean, if we have a lot of sideways movement, and it happens to be, sideways, but, keep in mind, sideways is also going to go from lows to highs and lows to highs. So I want to be able to buy those lows and take profit. So trades like Pound Aussie, we've put together, 500 or 600 pips worth of gains, and we're getting back in towards equal lows. It unfortunately, did not come back down to our wanted level, which was 79.20. It came down to lows last week around 79.30. So if I zoom in here, let me double check that. I had a pending order at 79.10, and I'm staring at lows on my chart right here at 79.26. So I should have just put another trade there. That it's 15 pips off the level that we wanted a pending buy, and we didn't get it. So it's okay. We'll get it. If I know traders are in, the robot picked up some trades as well. So it's looking good. Let's just stay with that trade and target that equal high around 1.8180. Other than that, I'd say a couple of currency pairs, a couple of charts, and I'll go into stocks here in a moment, go into the SPY. But this is going to be an interesting tell for a lot of currencies. Now, let's overlook the fact that this is the CAD yen. Okay, I think the CAD yen, the visuals on this represent a lot of other currency pairs in the markets right now. Aussie yen, Aussie Swiss, CAD yen, okay, Euro yen, Pound yen, Aussie Swiss, New Zealand yen. They all have this kind of look where we had this sell off in the middle of June, and we have had very little movement ever since. So I'm thinking that number one, this is the type of movement that if you're trading right now for the current conditions, the move right now is consolidation. The move right now is low volatility. So having the right system, the right strategy to, buy low, sell high, whether you're on the super small time frames and trend trading in here, which you've got to be pretty accurate about when you're buying, when you're selling. You can certainly do that. When price is giving you chart alarms down here, hidden chart alarms up here, you can turn on a buy only at the lows. You can turn on a sell only at the highs. And that's a nice way to be a little bit more actively involved. I am opting to do something a little bit more passive, and that is I'm running robots that just trade sideways conditions. So even with, kind of imperfections of highs and lows, what we're getting right now is a lot of false breakouts. We're getting a lot of test of highs and test of lows, and it might go, 20 to 50 pips higher or lower than those highs and lows, but we're not really experiencing a lot of breakouts. So what are the strategies I'm trading? Equalizer. What are the strategies I'm trading? Perfect storm strategies. I have the active storm and the rainstorm. Last week, between those two robots, I didn't do a lot of manual trading. This month has probably been 75% of my trading and profits have been automated, and they've been killing it. Last week, I crossed over 2,000 pips for the week on just robots picking up trades, and they're not trading a ton. I'm trading like 8 currency pairs, so I could certainly be way more invested, and I could have more opportunities, and I could probably make more pips. But I'm not spreading out. I want to make sure I have plenty of margin, and I want to make sure that if anything does get into trouble, I can manage it, and hopefully I have the eye, which I do, to make sure that I follow what I'm going to tell my traders to do, which is if we go from this consolidation into a trend, we shouldn't be range trading anymore, right? If it breaks out and goes crazy, don't range trade it. We should be switching into a different strategy, going to breakouts, going to flags, going to trend systems. That's a much easier way to trade this. Okay, so right now, this is a good illustration of what other currency pairs are doing. If it comes into the stock market, look, let's go to the QQQ, right? Let's go to the NASDAQ here. Let's go to the SPY. I want to be short, but I'm not going to fight the Fed. It's still, we still have summer trading left. We may not see a lot happening What could really stir up volatility in the stock market over the next couple of weeks? Probably these unemployment benefits, right? If they run out and there's not another rollout of either a coronavirus plan or some PPP loans that are being extended or timelines on the horizon, there will be again probably the threat of reclosing, the threat of massive layoffs. I know that airlines alone have talked about, and look, airlines took like 25 billion in bailout in Q1. And from what I was reading here from Robinhood this morning in their little newsletter, we have trying to find. There it is. So government spent $25 billion of taxpayers' money to save U.S. jobs, but it looks like the jobs are likely going to get cut anyway. American Airlines warned that 25,000 employees, which is around 20% of its workforce, could be facing potential cuts. There's also an 80% drop in sales expected. United Airlines told 36,000 employees, that's almost 40% of its workforce, that they'll be likely furloughed. Southwest Airlines, which has never had an involuntary furlough, told employees that cuts will happen unless passenger numbers are 3 times bigger by the end of the year. Delta, which I think is probably one of the more financially safe airlines, took almost a $6 billion loss last quarter, and they might consider cutting pilots' pay in order to balance the books and also avoid furloughs. So either way, like it's going to be felt, whether it's your pilots, your on the ground workers, it's not good. And this is after a bailout. So we'll see. And I think that Congress is certainly pushing for benefits to be continued to carry us into the fall on taxpayers' dollars. But it's going to be an interesting scenario. And again, this is all within the next couple of weeks. So that's probably where the urgency is coming. If we don't have anything like that happening over the next couple of weeks, then August is likely going to be really ugly. We might see some tick ups in volatility. We might see some better liquidity come back in the markets. So anyway, this is what I'm watching, right? So the NASDAQ is up here towards highs. Are we peaking? There's tons of divergence. There's tons of overbought conditions, but is this the structure to sell? No, not yet. Okay, I think that the structure to sell is we have to look for maybe an equal high up here, maybe a more aggressive trend line there, aggressive a trend line. We have to break the trend line here and get something a little bit more convincing. Otherwise, we could just drop, maybe short term and it's buy the dip. Drop short term, buy the dip. If it breaks outside of the structure, then it's wide open to the downside. And again, that's why I'm saying rather than me trying to time the technicals of the stock market, why not trade volatility? Okay, I would look to trade volatility instruments as opposed to trying to time the short sale of the stock market. So that's likely going to be my avenue of making profits on this right now. I remain patient in stocks. All the profits that I've taken so far this year. In fact, last week I also took profit on silver, and I know that silver is enjoying that continued rally. Gold is breaking higher above 1,800. Silver now hit the $20 mark for the first time since 2016. So nice little silver rally. Takes the profits there. It's been a couple of years. That's a good chunk of profit that I'm going to look to reinvest, but I want some better buy opportunities. Fortunately for one of my brokers using Robinhood as an example, I do have fractional shares. So I can just allocate a portion of dollars and just buy fractional shares. So if we have a dip on Microsoft, if we have a dip on Amazon, I would buy it, but I'm not going to buy at these highs. So, and I know that it feels like I'm missing out, but I've had a good year so far, stock wise. I'm having a good year forex wise. I just want to be a little bit more rational. And I think that with the uncertainty ahead, I certainly don't want to feel like I've got to get in. Now's a terrible time. From a technical standpoint, it's a horrible time. And we have the NASDAQ trading like, I think it's at like 31 times earnings. And there's just way too much on the table. There's way too much at stake, I think, for the uncertainty to just mess up everyone's plan. So I'm going to be more on the conservative side. I'm going to be more neutrally positioned. And like I said, for stocks, I've had a good stock year so far. Probably, I mean, some of the best dips and opportunities in short-term games that I've seen in years. I hope we get those opportunities again. Whether we come back down into March lows, I don't know. We may not. I might have to justify just buying dips on companies that I think are going to do very well. So if it's a strong position stock, a strong position company, that's a buy for me. Otherwise, if it's something like a bargain shopper, look, Delta would be a great airline to buy, but if they're talking about, furloughing or cutting or having just massive layoffs, it's like that's horrible, and it will be just kind of buying the puff that might be at the bottom when we break those lows back in March. So I'd probably stay out of that sector. I'd probably stay out of anything restaurant related, leisure related, anything that's going to be affected by consumer discretion. If people aren't traveling, if people aren't spending money, those sectors will be highly affected. So that's it. This is nothing out of the ordinary. This is nothing we haven't talked about over the last, 4 weeks, 6 weeks. These weekly outlets, I've continued to express this. I'd rather be on the correct side of the next big move than fighting it. I'd rather be on the bandwagon of where all the momentum's going to come and all these major catalysts are going to kick around volatility and things are going to get shaken up again. I'd rather be able to trade that and profit from it in the short term than have to be position trading for the medium to long term. That's just me. I mean, I'm in a different position. So I want to be agile, right? We keep saying that, but it's so important that, if we had March all over again, which it just feels like that's what we have. It's like March took everyone kind of by surprise, and I feel like it's setting up for another kind of wild couple of months, possibly from August to December. I would rather be prepared for that the right way and let things come to me and let things, be traded in the short term versus have positions out there pending, and then just all hell breaks loose and support resistance levels are disrespected. The market moves with volatility that we haven't seen in months, and just things can change that dramatically. And I don't want to be caught wondering what I did wrong. So instead, I'll trade more short term. I'll trade more reactionary. I'll trade more with what is working right now. What's the best thing to trade right now, and just be positioned. So, I mean, look, this week it should be pretty simple. I really haven't changed any major directions. If you write down these currency pairs: Aussie Swiss, Aussie yen, CAD yen, Euro yen, pound yen. I think I said Aussie Swiss already. If not, Aussie Swiss, New Zealand yen. Okay, that's 8 currency pairs. All of those right now are showing those ranges, those yellow boxes that just like I showed in that CAD yen. If they look like this, you have a certain condition you can trade right now. You can trade this yellow box, you can trade this consolidation, but when this breaks, be ready for conditions to change. We go from contraction, consolidation into breakouts and expansions. So when that happens, be ready. Okay? So you if you're trading strategies on this right now and making good profits, you have to switch gears and have something to fall back on. So that's a good way to switch into range conditions to trending conditions. It's going to happen. Okay, prices will certainly not stay like this forever. We see, volatility here that starts to get more condensed. We have a recovery here from April, May, and June. The big June sell-off, and nothing is broken. So we're doing a lot of inside trading here. Okay, not insider trading, but I'm saying inside this price action. There's a high, there's a low. Price is not breaking above those highs or lows. Okay, when it comes to the stock market, I'm going to play volatility. We'll talk about it this week in the trading room. That's it. A couple of good currency pairs. I like the Aussie CAD short. I also like the New Zealand CAD short. That's based on this one. So if Aussie CAD's going to drop, more than likely New Zealand CAD drops as well. Same thing. I'm just looking for this to fall back into a nice technical place. We have a daily harmonic where I love this spot around 85.70. We also have a weekly harmonic, which has been this entire currency pair's personality for the last 11 years. So weekly harmonic, we have a 382, 50618 level between these green lines. So between my daily harmonic and my weekly, I'm looking for this to drop down into here. Let me just draw this out. So like that. So I'm looking for this to drop back down into that area around 85.70. I'd be happy with that. That's a nice chunk of profit. I didn't even start selling this until up here. So it's just a matter of time. All right. So if you have some time, we can trade. If you're looking for profits right now in the short term, trade those tight ranges, trade some robots. I've got robots that are doing great. But I also know that those robots are good now for these conditions, and they'll have to change coming the next couple of months. As we end, next week, so not this week, but next week, as those unemployment benefits run out, that could be the next kind of spark where volatility might creep back in. August could be a really wild transition month, so more things to come. So if you have any questions for me, reach out, write me a message, leave a comment on the YouTube channel. You can also direct message me on Instagram. But that's it, traders. Have a good week. I look forward to trading each and every one of you in my trading room. That's a flex trading room. You can see that at smarttrader.com. Go into the marketplace section, and my room is available if you'd like to come and join me for a week, join me for a month. Totally up to you. But we have a lot of traders doing a lot of great things, making a lot of profits, and that makes me happy. So, all right, that's it. Have a good rest of the week. I'll see you in my trading room, and adios. Bye.